You've said it before, we've moved from the hope of a soft landing to the reality of one. Why does that allow the Federal Reserve to reduce interest rates?
Yeah, so I was here the first week of January, and I was so happy, right? Because hope is not an investment strategy, and we're actually in the reality of that soft landing. And I've been really impressed, John, this month. I think this month was critical because we got a very strong payroll number, first week of the year. We got a very strong retail sales number, and we got an above consensus CPI number. Also, initial jobs claims in the middle of the month were in the 100,000s. Yet, equity markets continued to make a new high. March, the probability for March went from 85% to below 50, and equities were still able to continue to march. So our take is, good news is good news. It's not good news, it's bad news. We're done with that, okay? And Chris Waller, I think, said it best 2 weeks ago when he said, as long as, and Lisa, you've been talking about this as well, as long as inflation doesn't, accelerate from here, we will carefully and methodically, those were two very important words, move interest rates down. March just seems a little premature. I think 50-50 is a good probability because, again, we do get payrolls on Friday, we get another CPI number, but nevertheless, they are on the move downwards. And I think that's what's leading to the financial condition easing, resiliency of the consumer, and us only have a 20% probability of recession. We're embracing this environment, John, especially...
Tell me how you're embracing it. Are you upping your exposure to equities?
Yeah. So, John, we have our largest overweight to equities in over 2 years right now. Since before that, first hike in March of 2022, which then later that year led to 475 basis point rate hikes. And I was here. I was less giddy than I was to this morning back then when that was happening. And because, John, this is why. Yeah. Like, diversification makes sense again. Bonds were the problem when the ag was on pace for 3 negative calendar years in a row through Halloween of last year. That was only 2 months ago. And now bonds could be a solution as long as all of this kind of goodwill does not lead to an acceleration of inflation.